Good afternoon, everyone. Hope we're audible. It's truly a pleasure here to participate in this important discussion on rural finance and credit acceleration. I think as we talk about the Earth Summit and the mandate, as well as the larger economic development and push towards the rural economy, I think this is an absolutely important discussion to have. We also have a truly distinguished and diverse panel. We've got representation from regulation, digital public infrastructure, credit information, platform lending. So I think you'll get a diverse range of views today. I'd like to start off by quickly introducing the panel. So Arun is not here, he will join us shortly. But Arun Seethamraju leads products and digital solutions at the Unified Lending Interface at the RBIH. He works deeply on credit rails and digital enablement across institutions. We also have Ashish Srivastav. Ashish represents CRIF Highmark. It's one of India's key credit bureaus, and he brings a strong perspective on borrower data, credit behavior, and risk visibility, and we'll have a lot of questions directed on that dimension. Sasidhar Thumuluri is the co-founder of Sabke Impact Solutions. He's also an advisor to UN Capital Development Fund and advisor to the Basic Social Enterprise Group. He brings in a lot of on-ground experience across SHGs, cooperatives, BC networks, as well as credit delivery to the last mile. We also have Chinmoy Kumar. He's the regional director at the Reserve Bank of India, and he will offer a regulatory viewpoint today on what it takes to actually harmonize a lot of the lending practices, drive responsible credit, as well as create resilience for the system at an overall level. And finally, we have Jinand Shah. Jinand leads online PSB loans. He's overseen the evolution within the space on digital onboarding, as well as multi-lender journeys for MSMEs and agriculture, including last mile enterprises. Welcome to all of you, and look forward to your views as we lead this topic. As we delve into the topic, I think 5 call-outs are absolutely important. Number one, and I'm sure you will agree with this, is that rural India is more economically active today than ever before. But the biggest challenge continues to remain on access to well-timed, and if I may also add, well-priced credit. I think that continues to be a challenge that we see. If you look at segments, you've got the small and marginal farmers, you've got the micro enterprises. They are the ones who are starved of formal credit, and I believe estimates also suggest that more than 50% of them actually starve access to formal credit and are actually at times forced to use informal credit. So I think that is a solution we need to solve for. Also at the same point, the gap is not so much on lender availability, but actually the harmonization of processes, data, even last mile execution to be able to deliver this. And as we see the evolution of digital, I think the one important aspect is really on how do we build trust for the borrowers to actually use these digital platforms and yet also keep it simple, scalable, and build those trust factors into the digital platform. I think that is going to be important. And if we manage to evolve all of this, I think it can really drive a lot of economic growth within this space. We are at a 40% contribution today, but that can clearly steep up given the kind of demographic advantage that we see in this segment and this sector. So just with these thoughts, we will move over the next 30 minutes into answering a few critical questions on this space. So let's begin with maybe round 1 of questions. And Ashish, I will come to you first. As we look at it from a credit bureau perspective, what I'd like to understand is what are those rigid and persistent ground level challenges that you see slow down credit delivery despite, policy intent being there, structural intent being there. Despite that, on the data part, what is really missing to be able to drive that delivery?
Thanks, Sidharth. Thanks for the question and thanks for the opportunity. So first of all, I do understand that the NTC and the thin foil is the main problematic area in the rural space. But as a credit bureau, if you look at, we as a credit bureau, we cannot solve this problem directly. Why? Because we are confined to use the data which has been submitted by the lender institutions only. So we cannot directly use the alternate data source. This is one. Second, if you look at the credit bureau's credit score, so the credit bureau scores are predictive in nature. When we say predictive in nature, that means to bring out the predictive score, we have to heavily rely on the borrower's past behavior. That includes the payment of the loan. Apart from this, we cannot use other data source. But having said that, through our macro level data information, we are trying to solve this problem to some extent for the lender. Like we are providing the market information report to the lenders. So let's say on PIN code level or the district level, through this report, a lender, what they can assess. So let's say in a specific geography, the proportion of the NTC borrower, when we say the proportion of NTC borrower, that means the borrower who took the loan first, let's say 12 months back, after that how the proportion of the NTC borrower has performed after 12 months. So there is a district A where a proportion is high, where the customer has performed extremely well. And there is a district B where the customer has not performed well. So in those scenarios, the lender can strategize their penetration in the area for the NTC borrower base. So through credit bureau, we can give this solution to the lender. But apart from that, if you look at, if I talk about the CRIF, with one of the another group of company like account aggregator, CRIF Connect, what we are doing and solving this NTC problem in the rural space, everyone knows now the digital footprint is increasing in this space. So if you look at the banking transaction, so what we have done, we have created a banking score based on the banking transaction. And the interesting part is that it has been tailored in such a way that the bad definition of the banking score and the credit scores are same. So in the absence of any kind of credit scoring parameter, you can use the banking score, and the definition of bad is same, that is 90 plus in 12 on this part. Another solutions which are available in the market is psychometric score and the behavioral scorecard. All these scorecards are heavily dependent on the demographic information instead of the credit information. So these problem we can solve with all these available solutions.
No, that makes sense. And Shashi, I'll hand over the mic to you. You've been operating at the last mile and you understand the segment and the challenges as well, right? So if we were to qualify beyond data, what are some of those last mile challenges that are actually preventing effective credit delivery? What would those be? And if you could shed light on those, please.
Thank you, Sidharth. Just to give a quick context, we run a large network of on-the-ground agents and also a fleet of field force who do a lot of heavy lifting on the credit side and also on the other payments and banking side. So we run both banking agents and also micro lending business. I think from a last mile operator perspective, and I've been seeing this whole business for last 25, 26 years. The days when SHG bank linkage program has started taking off in the late 90s to today, right, where you get a loan on a phone. I think the biggest irony, if I would like to put it that way, is that rural credit today still remains to be delivered in more or less same old-fashioned way than any other product that we think of. Still, we have thousands and thousands of field staff walking into villages, going to the households, looking at, physically assessing the credit worthiness and then making an informal decision. And that's still the most trusted form of credit assessment. And if you imagine, how many loans can you really give that way? And how far do we come? Of course, we have done a lot of progress, about 17-18% growth rate happened in the last 5 years and stuff, but that's not enough for the Indian context, right? That scale and magnitude we're talking about. Now, the whole, of course, there is, with all, expectations from regulators also here, I think there is a very, very proactive regulation in India and a lot of technology that's going on. But my concern is that the technology doesn't necessarily reach the last mile. We are not necessarily able to leverage the digital tools, and now everywhere it's all about AI. We can actually leverage AI data a lot more effectively and ease out a lot of physicality associated with this business. So as long as we are able to slowly transition from relying on an informal decision making to a formal data-driven decision model, now that, as my colleague is saying, data is not just about past credit payment. It's also about the environment they live in. It's also about the influences that they are subject to. It's also about their behaviors on different platforms. It's also about their payment behaviors on other financial platforms. It may be an insurance payment, it may be a bill payment, it may be some other transactions that may be handling. And all the data is now coming together. Most of it, not everything is digital, but I think we are seeing the digital footprint is growing. Even at least for the top 10, 15, 20% of the rural clientele, and of course it will all percolate down eventually. So we need to make some bold attempts, both from a regulatory point of view and also from practitioner point of view, to test out some of the truly digital methods of assessing this customer. I think the Grameen score is a good initiative, but that still is limiting, only about financial data. But we can bring in, maybe account aggregator is a better platform, a lot more data points together, make a unified score of a rural household. I think individual is not necessarily relevant in rural context. And then try and see if that score can be relearned, AI can be applied on it, and a lot more machine learning models can be built in to create the right persona, credit persona of these customers. And then, maybe a unique score can be created. It doesn't have to be always a credit score. It can be a trust score. It can be some kind of a confidence score that we can generate out of these different data points people are leaving behind. And maybe first 10% can generate some data which can go down further down. So in my opinion, there is an opportunity. The challenge itself is an opportunity. And there is a policy intent. There are technologies. There are fintechs sitting out here, want to deliver. And there is last mile delivery models that are set in place. So I think we need to just connect all these things together. And we will be seeing a revolution happening.
No, I think that makes a lot of sense, Shashi, because what you're also saying is that we can potentially create a score. We can potentially access a lot of data. What's stopping us potentially is also the acceptability of that data within our digital journeys and all of it, right? Which absolutely makes sense. Chinmoy, I think, we'll come to you with the regulatory aspect, right? When you talk about rural credit, right, you're really talking about multiple, state demographies. You're talking about multiple regulators. You're talking about multiple lending models as well, right? Because of the breadth and the depth of how India exists as it is, right? So when it comes to all of this as a regulator, from an RBI perspective, what do you think is the most important harmonization or simplification that you can offer as a regulator or should be offered as a regulator, that can help accelerate rural credit, but also while keeping our cautious outlook in mind, right? We also don't want to, endanger any prudential norms in the process. So what would those look like?
Yeah, thanks, Sidharth. This issue of rural credit, right from the beginning, it has been for our country, credit dispensation, the timeliness aspect, timeliness as well as adequate credit. These are extremely important kind of issues which, if you look at our policies, right from the beginning, be it, the days when we had this priority sector lending, the lead bank scheme. Later on in 1975, we had these RRBs, altogether a new category of banks which were entrusted with this job. Later on, we had the service area approach, and in 90s, as Arun was mentioning about this SHG linkage, bank SHG linkage. From then, we have now come to a stage where now we find that a lot of technology, a lot of these fintechs which are now actively involved in this space, right? That itself speaks a lot what kind of interest and how people are perceiving this landscape, this lending to the rural economy, how it can be done, how quickly we can do. There are challenges. You see, there are challenges in the sense that still we need to infuse trust and some kind of discipline amongst the lenders, right? When you said that, how do we ensure that it is prudent and no risk sets in that sphere? Because ultimately, credit, lending, everything that depends to a large extent on the kind of trust which we are building, right? So while I know there are many nimble-footed fintechs who are over eager to go ahead and do the last mile connectivity and all those stuff, that is fine, that is perfectly fine. But at the same time, we also need to ensure that the steps which we take are solid, are robust, so that there, I mean, you see, we are catering to altogether a different kind of borrowers, right? I mean, for them, for you and me, 50,000 or 1 lakh may not be very high, but for them, it is their life, okay? So if there we do not ensure caution, it may create, I mean, a lot of cascading effects down the line. So that is where I feel, while when you talk about harmonization and the way we have progressed in the last few years as far as digitization is concerned, as far as these Jan Dhan accounts are concerned, so as far as the financial inclusion part is concerned, now we have, to a large extent, people have bank accounts. Okay, now it is all about leveraging those bank accounts with their Aadhaar or whatever their identity, and then using these technology, as Arun was mentioning, Shashi was mentioning. So that is how we need to go. While I fully agree there is a lot of appetite, lot of scope in this area, but I would like to, maybe when we talk about harmonization, or one issue where you would want, or where we as the regulators would want, is that let there be some kind of we need to have a strong interoperability. That also he was referring to, account aggregator, a lot of these fintechs. We have CICs also who maintain a lot of these data regarding the borrowers, about individuals. Let us have a very strong interoperability system. The second, which I feel, is we need to have a trusted data sharing mechanism. You see, because that also is creating a lot of issues these days. The way the data of individual are getting leaked, and they are floating in the dark web. So those are concerns. And the third is definitely kind of responsible innovation. So I feel that these three together can certainly help us in leapfrogging from the current level of where we are situated. I think if we adopt these things in a very ethical and in a responsible manner, I feel that we can go a long way.
Perfect, perfect. No, I absolutely love your point. When you say harmonizing, right, you're also taking the human and the social aspect into mind. Because that's what the quantum of the loan means, for people down there. So absolutely valid point. We'll move into the digital side of things. So Jinand, I'll start with you first. With the rapid evolution, and today we are really seeing digital onboarding move much ahead, right? But from a rural perspective, wanted to understand, where does it work well and where does it actually face challenges? And if you could throw some light on that, please.
So first of all, I would just like to ask you all, is that, do you know how many MSMEs are there in India? Well, I'll answer because I'll not go to the audience. But everyone used to tell earlier there are 7 crore MSMEs, like 6.5 crore plus MSMEs in India. How many were registered before 2 years? Before 2 years, only 2 crore MSMEs were registered because they were having Udyam number. All of you might be knowing there's an Udyam registration. Only 2 crore are Udyam registration. But where are the other 6 crore, means 4.5 crore or 5 crore MSME है कहाँ? ये रूरल इंडिया के MSME कहाँ पर है? और वो अभी तक उसका registration क्यों नहीं हुआ है? I'll also tell you why I am telling you this. There were another 3 crore MSMEs जिसका formalization हुआ है last 18 महीने में. Today, the 2 crore registered MSMEs have become 6 crore registered MSME. इंडिया में 6 करोड़ registered MSME है, वो पूरी दुनिया में कहीं नहीं है. इतना डिजिटाइजेशन के माध्यम से onboarding and formalization of MSME हुआ है. Where did that 4 crore MSME come from? कहाँ से digitize हुआ? So there is a project which was run by one of the developmental institutions. Now why I am telling is, I represent a company called OPL, which is led by developmental institutions like NABARD shareholder है, SIDBI shareholder है, Mudra shareholder है. The only company in India जिसमें 3 developmental institution shareholder है. और ये developmental institution के साथ हम एक project कर रहे थे, जिसका नाम था उद्यम असिस्ट प्लेटफॉर्म. ये उद्यम असिस्ट प्लेटफॉर्म क्या करता है, जितने भी इनफॉर्मल एंटिटीज है, जैसे छोटे छोटे लोग होते हैं ना अपने इन अवर मॉम एंड पॉप स्टोर्स, पान वाला होता है, मैं अभी पोरबंदर जाके आया, all the rural, every fourth shop in Porbandar is a pan shop. Now this person would have never registered in an Udyam, right? So this all were getting registered. Around 3 crore people or sole proprietorships got registered through Udyam Assist platform. So that is the power of digitization. Now how will this help? ये 3 करोड़ जो रजिस्टर हुए हैं उन सबको लोन मिल पाएगा, क्रेडिट मिल पाएगा. Why I am talking about credit is because the shareholders of OPL are all the banks. SBI shareholder है, PNB shareholder है, BOB shareholder है, बाकी HDFC bank shareholder है. So they all give money, but for giving money they need formalization. कि formal data तो होना चाहिए कि ये MSME है और ये registered है. वो registration process खत्म हुआ. उसके बाद उसका data चाहिए कि कहाँ से ये MSME का data चाहिए. So in that part, getting data from various sources is which I will leave it to this gentleman over here because they are champions and doing one of the best products in getting the data of the various segments across India which are getting integrated in a platform. So what exactly we do? What we are doing today is we are creating a digital infrastructure which is enabling the banks to give credit. Now he will also say that he is enabling. So what we do is we build the credit infrastructure for lending. They build the infrastructure for giving the data to enable lending. Now if jointly all these things happen, India rural economy will be able to get credit, which since like 1950s everyone has been saying the same problem. Every summit you go, they will say, credit नहीं हो रहा है, इतने सारे unbanked है, इतने सारे को credit नहीं मिल रहा है, क्या है solution? तो there is a solution. But then someone asked me कि आपके जैसे 2-3 और आएंगे तो मैंने बोला इंडिया में अगर मेरे जैसे 10 लोग आएंगे ना तो भी पूरे इंडिया को कवर करना डिफिकल्ट है. तो जितने ज़्यादा लोग आएंगे, जितनी ज़्यादा फिनटेक्स आएगी और जितने ज़्यादा इंफ्रास्ट्रक्चर बनेंगे उतना ज़्यादा डिजिटल क्रेडिट होगा और उतना ज़्यादा बैंक्स लास्ट माइल तक पहुँचेंगे. So this is what we are doing today. Data, which is RBIH, which is doing that fabulously. Yeah. Infrastructure, which we have built with all the banks and developmental institution. And formalization. जितने भी informal लोग हैं, उसको formal segment में कैसे लाना है, वो एक बहुत बड़ा project है. We are, part of some of these developmental institutions, so we know how this happens. But bringing the rural Grameen banks and bringing the cooperative sector into this will be the next big thing in bringing rural credit into the digital play. So that's all from my side. Thanks.
Arun, I'll come to you next. From an RBIH perspective, if you could tell us, what is your vision of how rural credit has to flow in for the next 2 or 3 years? And then also to help us understand what those interventions need to look like, as you kind of make digital more seamless and let digital proliferate. What are those interventions that will need to be made across policy, regulatory, any other aspect to make just the digital proliferation much easier?
Sure. Thanks, Sidharth. Good afternoon, everyone. Firstly, apologies for joining late and thanks, Jinand. So I represent Reserve Bank Innovation Hub. It's a wholly owned subsidiary of the RBI. And one of the flagship projects that we've been building for the last couple of years is Unified Lending Interface, ULI in short. As Jinand was mentioning, the larger goal of this initiative itself is to see how every financial institution in the country or every entity which has a license to lend can have access to data and services. Essentially, if you look at the underwriting or a credit decisioning process, a lot of information or a lot of profiling of an individual or a enterprise has to be done before a credit call is taken. Now, traditionally, there have been various practices, which has been evolving by, bringing in the transaction level insights or the bureau information, or in the last a decade or so, if you have seen, a lot of non-transaction and non-financial information has been coming in. What we are also trying to bring in is more alternate data. So a mix of your transactional level information, non-financial information, and alternate data is what we believe should really give a better insights about the client. Now, there is one segment which is where there is data available. I mean, as a salaried employee, someone might provide information, but as we get in more granular into the unorganized sectors, the required information is very minimal. I think that is what we have been talking about. The different platforms that have been developed is to see how the access to credit be further simplified when it goes much granular, much into the unorganized sector. And from a ULI perspective, that is what we have been doing. One part of it is how we bring in a lot of data sets from which are residing with the ministries, which can be brought into a single platform. Second, there is a lot of private innovation that's happening, which again, in the form of a solution or a services. All this coming together on a single platform, and for a lending institution, through a single integration, if they'll be able to have all this of the access in a standardized way, then the customer, the end customer is who's going to benefit. Today, a lender is offering services to a customer, but is not well equipped to have this kind of infrastructure to have a better profile, versus a lender B who's already invested heavily on the infrastructure. Now, the end customer, either it is high TAT or it is, not getting the right kind of exposure or the loan amount that they deserve because of the not kind of a risk profiling that is being done. So for us, it is very important that how this platform evolves, how we can bring in more and more data sets, and not just limited to the salaried employees, but when we get into more retail financing, or even into the MSME, in the unorganized sector, in the rural financing part of it, all the approach itself is going to really give the lending institutions more freedom to customize the products, or profile the end beneficiary in a right way. Now, access to data is where we start. Then we are talking about various platforms that come in, which then focus on how the customer experience can be really made in a nicer way. So in this journey, we have already engaged with NABARD, where one of its projects has already gone live to bring in the standard LOS across the RRBs and DCCBs. Now we are working with Mr. Jinand and their team also on one other initiative, which is going to go for a major launch very soon. But all this put together from our end, the access to data and services, then their solution, which will be a front end and simplifying it for the lending institutions. I think this is the way forward. I mean, we are not limiting it to access to data, but also opening this platform for more innovation to happen.
Got it. No, I think, from what I hear also, I think data continues to be the largest roadblock as such, and maybe that's why we go to Ashish next and we compel him to give us answers. But no, as we get into the next round of questions, please feel free to chip in on either of those questions. So, Ashish, we've been speaking about data. I think Chinmoy also mentioned how there's a lot of data available, but somehow it's not getting shared back formally to create a structure on which that data can therefore go back, and then there's more intelligence for us to lend upon or use credit upon, right? The real question is, even today, formal credit is using very limited data. I think at scale, formal credit is not using a lot of alternative data, is not using, let's say, digital footprint information. And even some of it we spoke about, right? Cash flow predictability. I don't think even that is a source of data that's really channeled, right? So if we have to use alternative data effectively, whether it's payments behavior, crop cycles, FPO data, how do you see a commercial construct being built around it? And what can be done to kind of deploy this at scale?
Thanks, Sidharth. So, Sidharth, if you look at the credit bureau perspective, so I'll come through the data submission part first. So if you look at there are two different data submission. That is, one is the retail and second is the microfinance. So in retail, if you look at, there is a field called the monthly income of the individual borrower. And in microfinance, if you look at, there is a field called household income of the borrower. Correct? So in retail, this field is not mandatory. So if you look at the fill rate in the retail space, it is around 30-35%, where you can get the individual level income information. But if you look at the microfinance database, it is mandatory to report. So all the loan which got disbursed post 1st April 2022, in a nutshell, currently there are around 12.5 crore loans are active. That corresponds to around 7.5 unique borrower in the microfinance space. So if you look at the household income for these borrower, it is available in the credit bureau data source, and these information we are making available on CR report itself. Whenever a lender is pulling the report, if that borrower is belonging to those database, then that lender is able to get those information. This is one. Second, on the income part, if you look at the cash flow analysis, income is the crucial variable. So though from credit bureau perspective, there is a limited use case as I was explaining, but as an alternate data source, as I was also like responding to your first question in round one, through the account aggregator, through analyzing the bank statements, I mean, the lender can assess the income of the borrower. This is one. Second, through the statement, they can like also see the pattern of expenses and the expenditure of the borrower. And with all those information, I mean, they can derive some good KPIs, like let's say best day to debit. When we say best day to debit, that means what would be the best day during the month where the borrower's account can be debited by the lender, so that the probability of the delinquency for the borrower can be minimized. This is one. And second, the interesting KPIs can also be like derive the saving runway. Saving runway means if, let's say, in any unfortunate scenario, if borrower's income were to stop, then how long this borrower can sustain with the existing expenditure. So with all those KPIs and the information, and the lender can leverage the alternate data source.
No, that makes a lot of sense, right? Because what you're saying is it's just not data, but it's also analytics on the data.
Correct. That's true.
That actually enables a lot of insights, even if it's from a portfolio monitoring, from a prediction perspective, I think it makes it more intelligent. No, absolutely makes sense. Shashi, I'll come to you next. Talking about institutions, and I think Jinand mentioned the point that the way ahead is definitely to get RLVs, cooperative banks, everyone onto the platform and get them to kind of use it at scale. But also structurally, SHGs, cooperatives, FPOs are powerful, but their integration into the formal credit architecture has been a challenge, right? So what is the most scalable way to put them into mainstream lending?
Yeah.
And how do you solve for it really?
So before I get to your question, I just have a small comment on Ashish's point. See, there is a lot of data, I agree, from Microfinance Bureau of incomes, but I think Ashish will agree that if you really look at that income, how much will it be for every family? And sir also will agree that there is a regulatory cap, and that regulatory cap has become a diktat. And we can't rely on that income anyway. So the point I'm trying to make here is, while that is true, that it is difficult to verify a rural income at the face of it, there are now ways of capturing that income from alternate methods. I'll give you an example. We are trying one interesting experiment in our ecosystem in basics. You take images or videos of the living conditions of a person. Okay? You can you can actually take an image of a shop or a farm. You can actually rework on a potential income that crop can generate, a shop can generate, or the consumption of the family, if you look at the family's living conditions. I think there are alternate ways. You have to train the tools and do a lot of data crunching and collect a lot of data to verify and validate all that. But there are ways to bring the informal, as I was saying in the first point, the informal information. There are ways to make it more objective, and then use that for perhaps credit score. So I think there are methods we need to use.
And I think, Shashi, we collect that also as part of the assessment process, right? You're collecting photos of the living conditions and all that.
Yeah, exactly. Yeah, but today it is done in an informal way. An individual goes and that fellow tells her, oh, acha hi hai, de sakte hain, but you're relying on that person's judgment, and tomorrow that person is not even in the system and somebody else is collecting that loan, and you have a disconnect, right? So how do we actually convert all this into formal? That's just a comment on income. But coming back to your question on the institutional mechanisms, I think huge applaud for the government, RBI, NABARD, for even imagining that this fragmented demand can be aggregated, either as an SHG or a cooperative or a FPO. And today we have huge numbers. In India, everything is in billions. So we all take pride in saying that we have 1 billion members in SHG ecosystem. We have 500 million farmers in a FPO ecosystem. All that is there. But with all due respect, I feel this is all structured in such a way that it's kind of a black box. There is zero data in public domain of what SHG lending is all about. Credit Bureau has no information about what is happening with these all SHGs in this country, and when bank linkages, that particular bank has the information. But if I'm another bank and I want to lend to the same SHG, I have nowhere to go. They refuse to give the data to a credit bureau. It's also, if I can make a provocative point, there is a political intent here that you want to keep it outside of the credit bureau system. I don't know why we exclude these people when they are built, they are institutionalized, they are actually borrowing, they are repaying, but their individual repayment behaviors are not recorded. And it's a lost opportunity. And that data, it's very difficult to bring it back for last 10 years. They're trying to digitize all this, and some good proactive SRLMs are trying to do it, but I don't think it's that easy. These records are not verifiable. They are manual records. They're not audited. It now comes, manifests into an FPO world. FPO world is such a great platform where all farmers, they produce, their data is aggregated. But now the whole problem again lies is, what are we assessing when you're giving to a FPO? The director's credit history, not FPO's credit history, not FPO's records, because there is no verifiable information that is available in public domain.
On the track record as well.
Yeah, so we need to formalize these things, and with all, again, due respect to the whole intent, get it out of the clutches of the government. Make these things available to private sector. There is I'm not only talking about credit, there are, so many things that, today AgTechs are working with FPOs and trying to build, value chains that are so valuable. But where is the data going? Is that available again? No, it's available within the private environment. How can we try and bring all this data and create what we are calling Grameen Score, in my opinion, should be a composite of all this information that is already there, but it is not available for consumption. So as long as, with the ULI and everything happening, in my opinion, that is the direction we are going to take. But somebody has to make a very serious attempt to connect all these dots and bring the institutional information to a public platform where PSB loans, I don't think PSB loan, SHG can apply a loan and get a loan from you. Or FPO can apply for a loan. But such a great platform, lost opportunity. So in my opinion, there is a work to be done. I'm not criticizing, I'm basically provoking a possibility that we should bring all these things to some way, formalize it, record it, digitize it. I think we have a gold mine to capture.
That's a great point, because... No, go ahead, please.
Just one comment on the SHG statistics piece. While I'll agree with Shashi that the individual SHG borrower performance is not available with the credit bureaus, but on some highlights of the statistic that what we are doing in this space. So if we are, let's say, benchmarking ourselves, the database which is available with the NRLM, currently in SHG ecospace, if you look at, there are total 90 lakh unique SHGs are available. And when we look at our database in terms of group lending, there are 90 lakhs active SHGs are also with us in our database. That means the banks are submitting the information at group level, as Shashi was explaining. In terms of the individual borrower information, so if you look at the NRLM dashboard, there are total unique 10 crore unique SHG borrowers are there in the country as of now. When we see our database, in terms of individual borrower information, there are 50% of this 10 crore, that means around 4.5 or 5 crore individual borrower demog information is available in our database. There is no loan level performance just to make these borrower credit visible. So let's say you think of a borrower who has availed loan from the SHG only in last 5 years. So what we are trying to build, and currently we are providing on CAR report itself, if let's say if there is a lady A and the inquiry has been made with us, we are trying to search this customer, whether this customer is associated with any SHG. If we found that customer is associated with the SHG, then we are providing the information on CAR report that this customer is associated with XYZ SHG for last 5 years. So that at least that borrower is visible in front of the branch and in front of the banks, whether that customer is already in the financial inclusion system.
No, perfect. I see that there are moves being made, but absolutely we can get more done out of that space as well. Chinmoy, I'll come to you with the next question. I think you've offered your views as a regulator and how you see the space evolving, right? But as we look at doing more digital, more partnership-led rural products, right? I think if I may take the liberty, there are three things that we feel particularly about this segment, right? One is, how do you get fair pricing? And I don't know if there's regulatory involvement on ensuring that there's fair pricing available to all of them, because the range of pricing can be quite extreme when it comes to this kind of a segment, right? The second is, as digital moves ahead, right? They need to understand it, adopt it, and use it the right way. So borrower protection also becomes extremely important. And third, a point that he mentioned as well is the entire bit about early risk identification, preventing over-leveraging of individuals or families, right? The social aspect that you also spoke about, right? So, what would be some of the ways to kind of protect all of this? And if there's anything else that you also see as important to protect?
Yeah, you see, all of us now, I mean, in the first round also, and now Ashish, he was mentioning about how we are capturing the income of these SHGs or the microfinance. Yeah, this is, again, it is emanating out of one of our regulations, okay? So here, the main objective, again, I'll come to what Shashi was mentioning, that the income which is stated or which is mentioned, indicated, that may have some contamination, it may not be the correct one, but the fact remains is, why did we get this information, or why do you want this? This has been done to basically assess the kind of over leverage. Okay, I mean, it should, if somebody has, okay, there can be issues relating to whether the income has been correctly captured. But let's assume a scenario where, using different methods and all, we are able to establish, okay, this is the right kind of income, or this is the correct income. So if we have that thing, and then we want all these lenders and the banks, non-banks, or other entities, that they also should ensure, they should not go overboard and then, I mean, do this, the issue which we are concerned about, this over leveraging. Okay, because for a borrower, because we have to see the kind of borrower we have in our country. I mean, their education level, it could be various. I mean, let's not take them for a ride. I mean, possibly this is where we want to basically put some kind of a cap, exactly in the same regulation which we had come out in 2020 on this microfinance thing. We have also said that vis-a-vis their income, what is their exposure? Okay, so the cap or the repayment cap, those things also the lenders, they have to look into.
Steps to set it also, to say.
Yes, so this is as far as the leverage, how we want to contain the issue of over leverage. Okay, so this is from the point of the borrowers. Coming to the ethical practice and the issue relating to fair lending code or fair practice code, or how this pricing is fair and proper. Here also, if you see our instruction relating to digital lending, there we have come out with instruction relating to this APR, the annual percentage rate, that has to be clearly, and the concept of this key fact statement. Okay, many a times, we receive a lot of complaints wherein the borrowers, they allege that they have not been told what exactly is the correct rate of interest, right? And we, every now and then in the newspaper also, we keep getting to see that how people have the issues relating to suicides, farmer suicides, borrower suicide. So see, this is fine. I mean, for many of us, it is a business opportunity. I'm not saying that no.
Agreed.
But at the same time, let's also be conscious of that fact, right? And this is where our guidelines relating to, be it this APR, then we also have this fair practices code, where we have said that what kind of recovery processes or mechanism these lenders, they have to resort to. Okay, so these are some things where we are trying to build in some guardrails. Okay, so while fine, the ecosystem is evolving, there is a lot of business opportunity, but we should not lose sight of this also.
I fully
right?
agree.
We have a grievance redressal cell. In all the banks, over that, we have our ombudsman scheme where we, on a regular basis, we keep getting customer complaints saying that this is what I was assured of 12%, but then when I am repaying, I mean, when I feel that I have repaid my loan, the borrower is telling, no, you still have outstanding. This is something which all of us also need to be cognizant of.
It's also those interest computation mechanisms are so complex. So
No, but
sometimes
that is
there's not
what,
clarity as well.
that is why we have said that in the key fact statement, let it be absolutely bold and clear that this is what
This is how you're
we
going to
will be
charge the
charged.
customer as well. Yeah.
Okay, so these are some things which all of us as responsible entities or, I mean, be it fintech, be it banks, non-banks, all of us have to, we just cannot look at this piece saying that, okay, let's go and, I mean, let's have a profiteering objective or let's
No,
go
absolutely
and
valid
fleece
points,
that.
right? Because we're seeing this last mile economy has to grow. And then if you make the cost of capital so high, because all of them are entrepreneurs, right? It doesn't solve the purpose, because then that growth that you're expecting, the double-digit growth, is not actually going to be possible with this kind of a cost that's attributable to them.
No, so that is where I think we, all of us, I mean, we have to be adhering to whatever instruction guidelines are there. Fine, I mean, there could be some issues where there might be some ambiguity as far as the instructions are concerned. But then that, having said that, it's not that we need to issue instruction for the entities to adhere to that. Otherwise, also as a responsible lender, people should be knowing that who our target borrowers are and how we should behave with them. So that is basically, I believe that over, I mean, as we grow, as people become more aware, as the level of financial literacy goes up, these things also will slowly taper off. But at this point of time, I would urge everybody whosoever is involved in this area that this is also a very sensitive thing which we should not lose sight of.
Absolutely.
Yeah.
No. Completely appreciate your point, sir. Arun, I'll come to you with the next question. So I think with ULI now being foundational for every credit institution, what do you think is the structural friction from a ULI perspective? And how can ULI really unblock a lot of these structural challenges when it comes to last mile lending?
Sure, Sidharth. Before that, I definitely agree with Shashi and the point of access to the data, especially when it comes to SCG. I think that's exactly the problem what we are trying to solve through ULI. Either you have stories where there was no suitable product, or when there is a suitable product, you don't have the right kind of a data. So I think all of these are interconnected. So that's where, like, from a ULI perspective, see, 2 years back, two and a half years back, when we started our initial pilots, even before the platform, thinking came in, was to see how, we pick up some kind of a complex products, like, something like a digital Kisan credit card, which has been like a kind of a popular product in India for last almost 3 decades, had a good influence in the agri sector, but and also, like, kind of a revolving credit for the seasonal requirements. It should have been like more strengthened in terms of the processes, but we saw that there is a lot that could be done. Is where we try to stitch the processes together, or work with the lending institutions to see how we can simplify this or make it even a better product. And that's where our digital KCC project started. And the biggest intervention we thought was required is to see how the access to the critical information in that, which is the land record verification. There is one, you have a KYC over the customer, then you have like the bureau information, but then what is critical or what is delaying this entire process is the verification of the land record. The farmer who claims to own that land parcel, how that is being verified. While there are definitely, there is a database that you can go and access, but all these are completely paper and people dependent processes. Like, how is that you can, take it away? Should every lender start doing it? Or is there a way in which you simplify that process for them and they focus on their work, which is more, product customization? So so once we started building the platform is where We have started engaging with the land record, some of the revenue departments of each of the states. And yes, there are different challenges, the way the data is being brought in, the mutations, how they have been stored. We understood that then we realized that, okay, it's not just about a tech integration, but also you need to create common schemas, which will again simplify it for the lenders. We are trying to solve a problem. We are talking about a problem today and we want to solve the problem today. We don't want to really start putting a plan which will take next decade or so. So I think we have covered some distance. We have close to 9 different states today integrated, and our proposals are with every other state and UT in the country. And also to just highlight, there was a high-level meeting that happened on the 23rd of June this year, chaired by the Secretary DFS and co-chaired by the Deputy Governor RBI, where most of the discussion was to see how the data sitting with the ministries can be integrated. While, okay, one, either the data is available. Second, if the data is available in the format that you can integrate, and third, how soon can you integrate? I think in principle everyone were aligned that it is to be integrated with EOLI. So Shashi, you will get to hear soon on some very interesting updates as far as SAG is also concerned. But I think that's why we are also trying to engage with each of the states to see how there could be good interventions in terms of other sectors, especially in the rural part of it, the fisheries. The dairy sector, we have done some good pilots in terms of the dairy also. I mean, there again, how long a dairy farmer, can keep coming and giving the data in a manual form. How long should he keep proving that, yes, I've been supplying milk to the same society, or how long he be only offered only a cattle finance. Whenever we talk about dairy sector, why is it only about cattle finance? They have a household, they have children, they have there is a need for other personal loans, education loans. But all this only when there is that kind of a visibility about that specific farmer and the household. So I wouldn't say we have cracked that completely, but we are trying to work with the respective departments to see how it can be brought together. If that kind of infrastructure is not there, who are the other stakeholders we can bring in? We'll continue to focus on our core, which is aggregating, or bringing in the data. We are not a repository. We are trying to build that pipe to see that all those data sets can be accessed in a standardized form. But yes, there is our focus will continue to be see how the rural financing can be simplified.
That's a very noble thing, right? Because we're still in the fight, in the race to get more data coming in and make that accessible, democratize it to all lenders.
It's a DPI, Sidharth. It's a journey, right?
It's a journey,
What I can definitely tell you is we are on the right track.
Yeah.
What will be even more interesting to see how much more we can bring in. Yeah. Maybe all of us might not be aware that there could be some data that might not have been used traditionally for a credit underwriting. I mean, as good as satellite information, correct. We talk about it, lot might be good use cases in the insurance, yes, but today in the agri sector, it is very relevant,
Yeah, so, absolutely. Satellite weather information, all of that is extremely useful. And just your point, I love that point, right? You're saying, you're not trying to, create a problem, but actually trying to solve it by looking at the quick wins and trying to get what's doable and do it in the shortest period of time. I think that makes sense from an execution approach as well, which is very valuable.
Right. Today we, I think, focusing on these sectors also, as I mentioned, there is some good developments happening on the dairy and fisheries, also on the MSME part. In fact, as we speak, we are focusing on to see how we can come out with the straight-through processor for the complex of the products in the MSME. It's quite diverse. It's not just a single product, right? So very soon you'll get to hear more on the developments happening on this.
Perfect. Sounds amazing. Jinand, I think last question to you. As we move towards a potentially near future pure play integrated seamless digital journey, just wanted to check what is your vision of how that credit journey will look like. For the customer, one that is fast, it's trustable, very little documentation, a lot of data. So what would that vision look like for you, Jinand?
So from platform point of view, many of you would have heard on platforms like Jan Samarth. So Jan Samarth is actually a platform where every government scheme, if you want to get a loan from every government scheme, there is a platform launched by the Prime Minister which is called Jan Samarth. Now, a lot of us know that there are solar rooftop scheme that has been announced, and every loan of solar rooftop, it gets processed through Jan Samarth. So, every month we can say more than 2 lakh loan are getting sanctioned using a digital process, a platform. 100% digital loans are given for solar rooftop schemes. So, if you want to have a solar rooftop on your house, You can get a loan digitally from any bank using Jan Samarth. And if you use the ministry website also, it will use Jan Samarth journey and give you the loan. Now, this is how platforms are evolving. They are all consolidating into a single infra from where you can get everything together. And also the second thing that is happening is cross-platform integration is happening. Say RBIH APIs will be integrated into a platform like Jan Samarth. So Jan Samarth, which is fetching data from 3 places, will be able to fetch data from 10 places. And today there may be 10 schemes on Jan Samarth. Tomorrow we can bring 20 schemes on Jan Samarth. Right? Now I'll talk to him also on what is happening on SHG part. But today Jan Samarth is bringing or launching an SHG based loan possibly in this month or next month, completely integrated with NRLM systems. It is also moving to next level where every individual who is a member of SHG, उसको हम हिंदी में लखपति दीदी बोलते हैं. There is a लखपति दीदी. And लखपति दीदी कौन है कि ये SHG members जो है, individual women है, वो सबको एक लाख का रेवेन्यू होना चाहिए. उसका जो लोन चाहिए वो मुद्रा कैटेगरी में है. तो वो लखपति दीदी कैसे बनाएंगे? तो हर एक वुमेन को लोन जो देना है वो भी जन समर्थ के थ्रू होगा, राइट? But to give this loan, we have to have massive integrations on Jan Samarth infra. So I'm just giving an example of Jan Samarth. There are multiple such platforms, just like इन्होंने बताया एक PSB 59 है जो MSMEs का है, जिसमें अराउंड 30 लाख MSME को लोन मिल गया है. बाहर मीडिया में इतना नहीं आता है, but 30 lakh MSMEs have got loan for 3 lakh crores. 3 लाख करोड़ का सैंक्शन हो गया है वो प्लेटफॉर्म से, राइट? बट दिस इज ऑल दैट इज हैपनिंग. सो प्लेटफॉर्म्स are going to play a key role, but integration with the entire ecosystem. ये सक्सेस कब होता है कि एक साइड से डेटा आता है इधर से, प्लेटफॉर्म पूरा रन होता है, और दूसरी साइड बैंक्स हाईली इंटीग्रेटेड, डीप इंटीग्रेशन इन बैंक्स जब होता है वो प्लेटफॉर्म का, उस टाइम पे वो प्लेटफॉर्म सक्सेसफुल होता है. सो फॉर एनी सक्सेस टुमारो, इवन इन कोऑपरेटिव सेक्टर, रूरल सेक्टर, सब बैंक्स में जो हो रहा है, एपीआई इंटीग्रेशन इज गोइंग टू बी द की थिंग. तो डेटा मूवमेंट विद इन द इकोसिस्टम और उसमें कितने पार्टिसिपेंट्स एक दूसरे के साथ इंटीग्रेटेड है, वही सक्सेस लाएगा. सो हुएवर आर स्टार्टअप्स ओवर हियर, एक सिंपल एक एग्जांपल देता हूँ. जन समर्थ में एक स्टार्टअप का लोन अभी लॉन्च हुआ. इट वाज रिसेंटली लॉन्च के कोई भी स्टार्टअप को 20 करोड़ तक का लोन चाहिए तो डिजिटल अप्रूवल फ्रॉम हर एक पब्लिक सेक्टर बैंक उधर से मिल पाएगा. इट इज़ अ 2 hour जर्नी. 2 घंटे में आपको डिजिटल अप्रूवल मिलेगा. जो स्टार्टअप बैंक में जाके थक जाता है और इक्विटी फंड्स ही रेज करता है, बट गारंटी स्कीम गवर्नमेंट की है, वो गारंटी स्कीम के अंडर उसको 20 करोड़ तक का लोन मिल सकता है. नाउ द स्टार्टअप्स आर नॉट अवेयर ऑफ दिस, राइट? सो दिस इज द पावर ऑफ प्लेटफॉर्म्स एंड दिस इज हाउ लॉट ऑफ थिंग्स consolidating that will bring the next revolution in India.
No, absolutely. I think through this discussion, while we discuss challenges, what we also figured out is that all of us are making moves to solve those challenges, and a lot of it is available in the public domain. Some of them are in the works, and it's slowly happening, and we are seeing, last mile lending truly transform. So, gentlemen, extremely heartening to hear your views, and I hope even the audience has had a good reflection and an insight into what is actually happening to transform at least the lending journey till the last mile. I think we will call it a stop now, but thank you so much for your insights and your participation.